Ladies and gentlemen, good day and welcome to Q4 and FY25 earnings conference call of HG Infra Engineering Limited, hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Ms. Saloni Ajmera from Go India Advisors. Thank you, and over to you, ma'am.
Good morning, everybody, and welcome to HG Infra Engineering Limited earnings call to discuss the quarter 4 and FY25 operational and financial performance hosted by Go India Advisors. We have on the call Mr. Harendra Singh, Chairman and Managing Director, and Mr. Rajeev Mishra, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore moved in conjunction with the risks that the company faces. We now request Mr. Harendra Singh to take us through the company's business outlook and performance, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Saloni. Good morning, everyone, and welcome to the HG Infra Engineering earnings call for our quarter 4 and FY25 results. So during this call, we will provide an overview of our financial and operational performance, discuss our strategy, roadmap, and outline our growth ambitions. We will also highlight the key initiatives undertaken during the year and share our vision for sustainable long-term expansion in FY26 and beyond. HG Infra Engineering Limited, with 7+ years of going public, has demonstrated in all fronts maintain a speedy revenue and margin streak and with good controls over financials and process. Thus, well positioned to look beyond the present growth story. HG has delivered a good performance across all parameters, reaffirming its position as one of the fastest growing infrastructure construction companies in the country. We made meaningful progress in diversifying our order book, securing high potential projects across all sectors in highways and railways, also renewable energy, including solar and BESS. This marks a significant step forward into new verticals, including transmission and distribution, airports, and water infrastructure projects. Backed by a visionary leadership team, we aim to generate approximately 40% of our orders from non-road sectors over the next 2-3 years. This forward-looking strategy not only broadens our growth horizon, but also elevates the GIL to the next stage of evolution, creating long-term value for all stakeholders and contributing meaningfully to India's infrastructure transformation. Moving on to some updates on the infrastructure sector. To sustain its high growth trajectory, India continues to prioritize infrastructure development as a national imperative. The Union Budget 24-25 reaffirms the government's commitment to positioning infrastructure as a key driver of economic progress. Strategic measures such as enhancing funding, increased private sector participation, a strong focus on sustainability, and adherence to stringent safety and quality standards can pave the path for inclusive and resilient vision of Viksit Bharat. The road sector, though it has been a dull awarding in the last 2 years, however, the government is steadfast and its vision to transform India's road infrastructure, targeting the construction of 10,000 kilometers of national highways in FY25-26 to enhance connectivity and reduce logistics cost. Flagship programs like Bharatmala and PM Gati Shakti are propelled this growth with ambitious plan to develop 50,000 kilometers of access control expressway by 2037 under Vision 2047. Thus, we have almost a great confidence during the year. Railways plan to invest approximately 16.7 trillion rupees by 2031 in freight corridors, high-speed rail network, and station modernization. Key initiatives include the redevelopment of 1,324 stations out of 508, which already are under construction, and expansion of dedicated freight corridors with robust private sector participation. The National Rail Plan outlines the detailed roadmap for future capacity and investment, identifying projects worth around 15 trillion rupees in HSR currently under discussion. HG is now positioned well with good experience in running railway projects and prepared to take more projects in this sector. Renewable energy and BESS, where the country is having strong focus, wherein from 78 gigawatt in FY14-15 to 199 gigawatt in FY23-24 already done. Solar energy has been the prime driver, contributing nearly 80% of the new capacity additions during this period. And to meet the 500 gigawatt renewable energy target by 2030, India has accelerated deployment through initiatives such as PM Kusum CL as well. Additionally, the government plans to issue 50 gigawatt of renewable energy tenders annually until 27-28, with 90 gigawatt already under construction and 44 gigawatt in development pipeline. The National Electricity Plan, prepared by the Central Electricity Authority, outlines specific energy storage requirements to meet growing demand. As renewable energy penetrates deeper, the role of energy storage becomes critical and ensuring grid stability and enabling round-the-clock clean power. The battery energy storage system, that is BESS, are emerging to the two key technologies. The BESS capacity in India is expected to reach 47.23 gigawatt by 2031-32. Supported by a suite of financial incentives, regulatory frameworks such as energy storage obligations and dedicated national tenders. This forward-looking approach reflects the government's commitment to sustainable growth, energy security, and a resilient power infrastructure, and gives us the opportunity to further extend our diversification into transmission distribution segment as well, thus setting up an overall ecosystem of new energy sector, right from generation, storage to transmission. The government has given a lot of services interlinking of river and canal, under which we are expecting next 5 years good water and irrigation projects like Waringanga, Nalganga river linking projects in Vidarbha, Ken-Betwa link projects in MP and Rajasthan and UP, Eastern Rajasthan canal projects in Rajasthan and MP. So these efforts will align the strong prospects of government under PPP or the EPC model, thus giving us an opportunity to participate in these projects. Urban infrastructure has been a big demand now, and there is immense potential to look forward in urban infrastructure, where demand has penetrated now into tier 2 cities as well, and has given thrust to develop big metros like Delhi Metropolitan, Mumbai Metropolitan, as well as Bangalore. Our journey has been shaped by resilience, flexibility, and consistent growth. Today, we are well positioned to tap into new opportunities in renewables, water and power distribution, and with strong execution skills, technical know-how, and industry experience, we are ready to take on large infrastructure projects that contribute to India's long-term development plan. Let me begin with a glimpse of our operational highlights for the year. As of FY25, the order book stood at rupees 15,281 crore, with roads and highways 10,392 crore, railways and metro at 3,097 crore, solar at 819 crore, and BESS 973 crore. Our order comprises of 36% of HAM projects and 64% of EPC. Segment-wise, road and highways contribute 68, railways 20, roads 68, railways 20, and solar and BESS around 12%. This is an update on the EPC project. At Ganga Expressway project, which we have achieved around 90% and continues to progress as planned, is expected to be completed in Q2 FY25. The Delhi UER project has been completed successfully and handed over to the authorities, and it is anticipated to receive its COD shortly. The Jamshedpur elevated project is running smoothly with a progress of 8.2%. The Nelamangala Tumkur project is gaining execution momentum after the settlement agreement executed and has reached 34.9% completion. The letter of award for the 2 MSRDC projects is expected in coming quarters. The delay is primarily due to land acquisition with the revised project alignment, which is the prime requirement for issuance of LOA. In the HAM project, the Karnal Ring Road has reached 62.1% completion, marking steady progress and likely to be completed in Q3 FY26. Provisional completion certificate for Raipur-Visakhapatnam corridor package OD5 and OD6 received in April 25. These projects are nearing completion Also, Raipur-Visakhapatnam project AP1 is heading for completion. All these three projects are on track for 100% completion by Q2 FY25. In the same fashion, PCC has been recommended for KD1 and 2 projects, and the progress in these projects stood at 79.9 and 80.8% respectively, and both projects are expected to be completed by Q2 FY2025. For the Chennai-Tirupati HAM project, the appointed date was declared on 14 December 2024 and is expected to gain execution momentum in coming quarters. The current project stood at 8.4%. The appointed dates of Varanasi-Ranchi packages 10 and 13 in Jharkhand are expected in Q2 of FY25-26, where significant development on forest clearance has been done. For Kosi Parikrama Package 6 of Ayodhya, the agreement is anticipated to be signed very shortly, and the appointed date will be followed in Q3 or 4 of this year. For Narol Sarkhej project, financial closure has been achieved and the appointed date is expected in Q2. This is an update on monetization of 4 HAM projects where we have successfully completed monetization as a first tranche of 3 SPVs, that is Gurgaon Sona, Rewari Ateli and Ateli Narnaul, as well as the second tranche involving Rewari Bypass was completed on 20th February 2025. All SPV shares has been transferred to Highway Infrastructure Trust, resulting in the total proceeds of 503 crore rupees. For the HAM asset monetization, for which we have initiated discussions with prospective investors for monetizing of 6 additional HAM projects that includes Raipur-Visakhapatnam Corridor Package OD5, 6 and AP1, Khammam-Devarapalle Package 1 and 2, and the Karnal Ring Road project. And we are sure to conclude the entire process and realize the proceeds by the end of this financial year. Regarding equity requirement on HAM projects, the total equity requirement for the 11 HAM projects is 1,657 crore. As of March 2025, 915 crore being infused, and of the remaining 359 crore is scheduled in FY26, followed by 197 in FY27 and 186 in FY28. Now turning to the progress of railway projects, the DMRC is around 72% completed and progressing as per the scheduled timelines. The Bilaspur, Himachal Pradesh RVNL project is 59.4% complete. Kanpur railway station project is 21.35% complete. The initial issues of land and forest clearance related has addressed now in this particular project is now in full swing. Dhule-Nardana railway project is 8.3%. Gaya-Sonnagar and Karanjgaon projects are at 7.5 and 6.4% completion respectively. And the slow progress in these two is primarily due to design and drawing revisions by the authority encountered on the ground of certain variations in COS. However, we expect to progress in the coming quarters as per the stipulated timelines only. As far as the solar project is concerned, SG Infra is strategically capitalized on emerging opportunities in India's expanding renewable energy landscape, particularly within the solar sector during this financial year. The company actively pursued solar power projects under the government Kusum C scheme, an initiative designed to accelerate the adoption of clean energy solutions across country. As a result of its proactive approach, SG Infra successfully secured 183 solar power plants, cumulatively contributing an impressive 700 megawatt DC capacity. And amongst these, the company is directly responsible for 167 plants accounting of 638 megawatt DC. This is with an estimated EPC value of 2,243 crores, excluding GST. To ensure smooth project execution, SG Infra has finalized the land lease agreement of all these PPAs successfully signed by DISCOM. Our progress on these all projects remains on track with approximately 63.8% completion achieved till 31st March 2025. The installation and commissioning process are proceeding as per the schedule, demonstrating the company's commitment to timely delivery and operational efficiency. In terms of the financial structuring, debt funding for these solar projects is progressing well, with approximately 70% of the required funding being sanctioned, and the remaining approvals and subsequent disbursement are anticipated to be finalized in the first quarter and subsequently second quarter of FY26. Regarding equity financing, the total equity investment required for the solar project stands at 721 crore, and as of March 31st, 2025, the company has infused approximately 445 crore into these initiatives, with the remaining balance set to be deployed in FY25-26. This well-planned capital infusion strategy ensures HG Infra maintains sufficient financial flexibility to meet critical project milestones, reinforcing its long-term commitment to sustainable energy growth and while expanding its footprint in India's renewable energy sector. As far as BESS project is concerned, the company has executed binding agreement with GUVNL and NVN for 435 megawatt, that is 870 megawatt hour, with a scheduled commissioning by December 2026. The core project cost for these two projects is around 970 crore plus GST, and with an equity commitment of 295 crores. The equity requirement during the current financial year is likely to be 120 crores, whereas the balance will be incurred in the subsequent financial year. Once all these projects of solar and BESS are completed and commissioned, the annual revenue of rupees 300 crore from solar and rupees 225 crore from BESS would be generated from these projects. Let me now give an overview on the other significant updates for Quarter 4 FY25. In Quarter 4 FY25, the company in joint venture with DEC Infrastructure Projects Hyderabad secured a significant rail development project from the Rail Development Authority for the redevelopment of New Delhi Railway Station. The total project cost stands at 2,195 crore, with the company holding at 49%, amounting 1,076 crore, that is inclusive of GST. Additionally, in April 25, the company has awarded a battery energy storage project from Gujarat Urja Vikas Nigam. This is the third project. The project involves setting up of 300 megawatt, that is 600 megawatt hour, in the state of Gujarat. The tariff for the project is set at 2,85,600 per megawatt, with a contract duration of 12 years. The core project cost is expected to be around 670 crore plus GST, with an estimated commissioning date by October 27. With this, the total project cost of this project amounts to rupees 1,700 crores, with a total project capacity of 1,470 megawatt hour. Moving on to the financial highlights for Q4 and FY25. As far as standalone financials are concerned, revenue for Q4 FY25 reached 1,973 crore, with an EBITDA of 283 crore and an EBITDA margin at an EBITDA margin of 14.3%. PAT for Q4 FY25 stood at 212 crore, with a PAT margin of 10.8% as compared to 160 crore and the margin of 9.8% in Q4 FY25. Revenue of FY25 stood at 6,052 crore compared to 5,122 crore in FY24. EBITDA for the period this year was 951 crore with a margin of 15.7% for the year. PAT for FY25 came in at 577 crore, maintaining a profit margin of 9.5% versus 545 crore and a margin of 10.7% in FY24. On a standalone basis, our gross debt stands at 1,068 crore. This comprises 404 crores in working capital debt and 664 crore from term loans and current maturities. The surge in the debt from the last year is due to significant funds deployed for procuring and blocking the solar modules to secure competitive prices and to complete all the projects as per the scheduled timeline. The debt will mellow down by Quarter 2 FY25 and further cool down by the end of this financial year. Now to the consolidated financials. The revenue for Q4 FY25 reached at 1,361 crore with an EBITDA of 239 crore and an EBITDA margin of 17.6%. PAT for Q4 FY25 stood at 147 crore with a PAT margin of 10.8% as compared to 190 crore and a margin of 11.1% in Q4 FY24. Revenue for FY25 stood at 5,056 crore compared to 5,379 crore in FY24, and EBITDA for the year was 1,058 crore with a margin of 20.9%. PAT for FY25 came in at 505 crore, maintaining a profit margin of 10% versus 539 crore for the same margin in FY24. As informed in our Q2 earnings call, the dip in the consolidated revenue and the PAT numbers in consolidated pertains to the inter-group transactions between HG and SPVs related to solar project, which are eliminated in our consolidated financials. As a result, revenue and expenses from these projects do not appear in the consolidated P&L statement, but are recorded in capital work in progress that under fixed assets. At the standalone level, HG Infra recognizes revenue from EPC work and pays tax on this income. However, in the consolidated accounts, both revenue and cost from these intercompany transactions are eliminated, reducing the overall figures and margin compared to the standalone financials. The tax expenses for this earnings remain impacting consolidated margin negatively until the SPV generates revenue from unit production. Once revenue starts flowing, this effect will reverse, improving consolidated financial performance. On a consolidated basis, the company gross debt stood at 4,092 crore. This includes 1,068 crore on a standalone basis and 2,055 crore as a project debt related to the HAM and 969 crore in solar project debt. Let's explore what's next turning into be our future strategy and plan. We are targeting an order inflow of 11,000 crores for FY26, with approximately 70% coming from roads and railways and 30% from other sectors. We remain confident in sustaining our EBITDA margin of 15 to 16% and achieving revenue growth of 17 to 18% in next year. Our focus continues to be on operational efficiency, strategic project selection and disciplined capital allocation to preserve margins, minimum debt and enhance shareholder value. While we have deep expertise in roads and highways, rising competition and shrinking margin in the segment underscore the need to diversify. We are actively exploring high growth sectors such as airport, roadways and transmission distribution, leveraging our core strength in execution and engineering. This strategic diversification not only supports long-term growth and margin improvement, but also strengthens our position as a future-ready multi-sector infrastructure leader. So we can now start question answer.
Thank you so much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you, sir, for the opportunity. A couple of questions. Sir, first on the margin front, so though this quarter margin was on the lower side, 14.3% EBITDA margin, but we are saying 15 to 16%. So just to get a confidence that was there any one-off in this quarter, and then now onwards we would be seeing a 15 to 16% margin?
Margin always remain to be in that category only, but because of this some provision and 1 or 2 projects where the change in law, this clarity was not there, so that has been looked into as a dip in the margin. But subsequently we are looking into raising this claim to the authority and recognizing this margin at a later stage. But however, we are confident enough that we will be our margin would be in the range of 15 to 16% in the year as well.
Got it. And also on the revenue front, when now as we are saying a 17 to 18%, so close to 7,100 crore kind of a revenue that we are looking at versus a 6,000 in FY25. So just trying to get a further sense on that the couple of projects where we are still yet to get a appointed date. So roughly around 7,200 crore is yet to get a appointed date, and particularly this MSRDC two projects. So how, if you can help us, how much are we looking at revenue from these projects where appointed date is yet to be completed? And also, in terms of, if you can help in terms of the solar, the entire, mostly the order book, 800 crore would be completed in this year, and how much are we looking at from railway? So just trying to get a sense that how are we confident that this 7,100 crore revenue we can get?
So definitely, as there is a total order which is 15,000 odd crore rupees, in which around 6,000 plus crores of projects are yet to receive the appointed date. But as far as solar is concerned, by quarter two, they will all be done 800 crores. So as far as base is concerned, we are considering not much, but 350 crore of this year execution, as we are committed to complete those projects by December 26. So this is put together around 1,200 crores coming from solar and BESS only. In HAM projects, they are the projects like Khammam Devarapalle package, KD1, 2, OD5, 6, AP1 and Karnal. They all will be completed, and there are around 800 crores of this balance work which is to be done in the year only. In projects like Chennai, Tirupati and the Jamshedpur, Tumkur, as well as so these are the projects which are going to yield additional 1,000 plus crores of revenue for the year. And look at the big number is Ganga Expressway, which definitely is going to be completed with 700 crores, which is balance, which is to be done within the year only. So we are confident that around 1,000 crores of revenue coming from railways and then solar and BESS, and the project which we are talking to, we are very fast and near to completion in these projects, and where the appointed date has recently being given in Jamshedpur and Tirupati. So there are a big chunk of business is to be done in the year. And talking of the appointed date, where the Turkish project, where the financial project done and the land is all available, there is one minor correction in forest clearance of 50 meters being done. In quarter two, it is likely to be there. Jharkhand package 10 and 13. So this is the project where we believe that it has been delayed significantly, but with the forest clearance already now nearing closure. So we are expecting quarter two, the appointed dates would be there. And as far the season starts in later half of the year, we are confident to have a good number. So irrespective of the fact Nagpur-Chandrapur project may not yield anything in the year, but we are confident that these are the numbers which gives us more than 7,000 crores.
Great to hear that. And then just broadly in terms of for FY27 also, given the 11,000 crore kind of inflow that we are looking at this year, if we get it, the similar kind of a 15% plus kind of a revenue growth should be there in FY27 also.
Yeah, of course, I think with the orders of Nagpur-Chandrapur converting into the appointed date and the other 11,000 more addition, we are confident enough that 8,000 plus crores can be done in 27.
And on this 11,000 crore order inflow, that particularly we are looking at 70% from road. Sir, for last 2 years, the hope is there, particularly on the NHI front in terms of the order inflow, but actually it didn't materialize. So are we now seeing a confident, and also if you can help us in terms of the bid pipeline and how much value of projects that we have already bidded. So just to get a sense that are we confident that the 11,000 crore, so maybe a 7 to 8,000 crore that we are looking at from road, we would be able to get it.
So there is a strong pipeline as far as DPR and projects are concerned. Had it be 2-lane paved shoulder to 4-lane, where nothing much is to be done, only the DPR and so likely to be awarded. With the slight delay is because of the pre-qualification already rolled out in EPC, and likewise it is likely to be there in HAM. So there has been some kind of a cooling period last year. But we believe, I think the budget is already in place, and there are many projects in the pipeline as far as NHA and ministry is concerned. Apart from this, we are looking into those projects from state like Maharashtra and UP, so they are also having their expressway pipeline ready. So we are expecting this is not a very difficult number for the year. And again, keeping this open with Adani, we are going to successfully complete this year. So they are also aggressively looking into few projects on a BOT. So we are looking into this particular prospect as well as for road EPC is concerned.
Okay, got it. Now just a couple of data points on the balance sheet front, sir. If you can help us with the mobilization advance, unbilled revenue, HAM debtors and solar debtors.
So as far as the mobilization advance is concerned, it is at 410, but it actually is 190 crore rupees from the client. So there has been, in the debtor part, which is the incremental solar is 585 crore rupees, which is to be netted off with 220 crore rupees, because in some of the SPVs, the advance has been paid, and some of the SPVs is the debtor balance. So typically it's a 202 crore, 20 crore rupees less than what has been there. So as far as unbilled is concerned, definitely it's 1,300 something crores. It's almost the same as last quarter, but there is likely to be a significant dip in the realization for the year, as all the projects which are nearing completion, which we were hoping last year, all these projects will get converted into the revenue as unbilled. It is HAM SPVs, as well as there is a Adani project which we will be completing. There is some variation item which are being realized now, as well as the other projects which we are talking, where the NHI, old UER, as well as DV89. So all these put together, where the unbilled is significant, is likely to be realized within this year in quarter 2, especially start from quarter 2 to quarter 3 and 4.
So as on March and solar debtors is
Shravan sir, I would request you to please come back in the queue for further questions. The next question is from the line of Gaurav Uttrani from Axis Capital. Please go ahead.
Hi, good morning, sir.
Morning.
So thank you for the opportunity. So just wanted to check on margins, as we are guiding for, or say we are targeting of 40% of the contribution to our books in next 2 to 3 years from the non-road highway segments. So how do we look the margins going forward? Like, would it remain in the range of 15-16%, or we can see some dilution because the segments we are catering to or we are targeting are bit competitive in nature? And would it sort of dilute our margins going forward?
So as we are expecting that definitely the execution due within next 2-3 years can come to 60% from roads, and other than roads is railway, it can be solar or BESS or even transmission or water. So looking into these sectors where the margin in historical past has not been revealed so good, but we are expecting that as we are doing in few of the railway projects, the margin are equally good at about 12-13%. So at EBITDA level, it is around 14-15% rather. So in solar, we did well and the margins are really good. So looking at these opportunity again, as averaging out with the HAM projects likely in railway roads, which are to be, we are expecting where the competition which has been so intense last few years is going to be cooled down. So with that, we are expecting 15 plus margin to 16. That is quite manageable.
Okay, sir, got it. And sir, apart on this, the recent notification which came out from the NHI about land clearance, on what they've been highlighting that land clearance should be done before tendering or putting on that. So how do we think, like, in terms of inflows going forward, or say for a coming year also, that would it be easier for us to get more of such orders from the NHI? And how do we see the tender pipeline also for the coming year and next 2 years in that terms? If you can just highlight on a macro level.
So definitely this is a good move as such all concessioners and NHI is concerned, because the land should be in place while first to even start tendering and awarding an appointed date. So but now as the time is being, significant time is being taken in those things, for that 25,000 odd kilometers, which as their PCUs are qualifying for 4 lanes, where the land is all available. So they are targeting to see those projects where the DPR is at an advanced stage can be awarded for the year. And subsequently, as for green projects, the green expressways or other projects where the land is likely to be as they are looking within. There is a significant up. This has been done. So with that advancement, we are expecting those projects as well, which we were available in the bidding pipeline last year also, likely to be awarded this year.
Okay, sir. And sir, lastly, on the working capital, we have seen that in FY25 there is an increase in working capital. And what sort of working capital do we target for the coming years? If you can just highlight the reason for FY25 also and the coming years, what we are targeting.
So there have been two reasons as far as working capital is concerned. We have gone for the say short-term loans as far as to see the mobilization advance, because the mobilization advance is is a 190 crore, and we have taken this call to take it from banks. So there is a very short mobilization advance. In lieu of mobilization advance, there is a STL. So we are being recovered as we are progressing into execution of all these projects. So the one thing also, there is a mean-term surge in that particular because of the solar locking the prices of the module as well as inventory, which has now gone very high, around 550 crore because of the solar inventory only. So this is going to be consumed within the year. So ultimately, as well we are completing this EPC, we are getting payments from tentatively 1,000 crore plus crore rupees from banks only through SPV. So this is going to be mellowed down by quarter 2 as well as by year end. It will come down to a very reasonable number.
Got it, sir. Just last question I missed, I think.
Sorry to interrupt, Mr. Gaurav, I would request you
Okay.
to please come back. Thank you so much. Ladies and gentlemen, in order to ensure that our management is able to address questions from all participants, please limit your questions to 2 per participant. The next question is from the line of Vaibhav Shah from JM Financial. Please go ahead.
Yeah, so thanks for the opportunity. Sir, I missed on the appointed date part. So you mentioned that for Nagpur Chandrapur, both the packages, we are not expecting any revenue. So earlier we were targeting roughly 250 crores in FY26. So we are not targeting anything for this.
Since as of now, the land acquisition where the realignment is being done because of some coal blocks encountered in that alignment, old alignment. So they are not getting the NOC from the western coal fields. So that is the reason behind they are changing some alignment. So this is taking some time. So as soon as they are acquiring 70% of the land, they will be issuing the LOA tentatively by this quarter 2 end, the LOA. And we are not expecting if anything is not being done is say because of the appointed date. So that's why we have taken out that particular project where the contribution may come or may not.
So secondly, on Varanasi, you are mentioning that it should be in Q2, the appointed date. So execution can be around 30% for the year?
Yeah, definitely. Because with the mobilization already done, we have already stacked the big amount of aggregate and everything has been done. So we are very suitably poised as soon as this appointed date by this quarter 2 in August and September we are expecting. Because the forest clearance is now at a very advanced stage, about 70 to 80% land clear. So with that, we are expecting that all execution will be where the mobilization done, as well as the project which we are completing very nearby. Therefore, will be done, taken up, and we are expecting more than 700 crores of revenue coming up from these projects only.
And sir, for Bahuban, what will be the appointed date target?
Which one?
Bahuban, the UP North.
UP North is likely by year end. Because very recently, just within 2-3 days, we are going to sign the concession agreement. So 5 months from now, we can expect by this October, November, where the financial closure and other things can done. So in quarter 4, we can expect the appointed date.
Okay. And so secondly, in terms of overall opportunity, so in terms of highways, are we looking for bidding for BOT projects in FY26?
No, BOT we are not interested as of now.
Okay. And so lastly, we had mentioned that there is some 5 crore impairment in the quarter. What was it pertaining to?
Provision.
Yeah, 5 crore impairment we have done regarding to other assets and you mentioned in the notes to account. So what is this regarding to?
I think I'm not getting your question.
In the results in Q4, there is a 5 crore impairment that we have taken.
No, it's not. I think there's some misunderstanding. It's not there, anything. So, Vaibhav, you can come back at a later stage to our team. Anything which you want to clarify later, or what are the doubts you have, we'll sort it out separately.
Okay, sure. Okay. Thank you, sir.
Thank you. The next question is from the line of Janam Jain from ICICI Securities. Please go ahead.
Good morning, management. Sir, my first question is, we had guided for 11 to 12,000 crores worth of project in FY25, and we have received only 9,000 crores worth of projects. So can you highlight something on that part?
So initial estimation was supposed to be 10,000 crores, and we added around 8,500. Is it?
So no, you had guided for 11 to 12,000 crores.
So we projected at around 10,000 crores of order addition initially, and we completed at around, say, 8,500. So that is the whole year.
Okay.
The loss of this thing is around 1,500 odd crores, which, because of this highway order, say not many of the orders or much of the addition has been done.
Okay. And this year we are targeting 11,000 crores, right?
Right. Yes.
Yeah. And sir, are we seeing any further big opportunities in railway station redevelopment side?
So we are expecting that we already has taken two projects. One is in Kanpur. While doing those projects, we understood that the initial phase definitely gets being brownfield, some permissions, some kind of chartered utility shifting took place, but thereupon it's quite a good, reasonably good margin. So that's why in New Delhi we have participated along with the partner. So look into these opportunities going further. Definitely, whatever project comes in.
Okay. Are there any major projects which are yet to get redeveloped? Major stations. I mean, the Mumbai is done, New Delhi is done, and a lot of major stations are done.
So also balanced, and there are many other projects where the small and big, not too big as well, but they are all balanced, which are yet to be awarded.
Okay, sir. And sir, we are seeing an increase in
debt level. Mr. Janam, sir, I would request you to come back in the queue.
All right. Okay.
Thank you. The next question is from the line of Vineet from Investec. Please go ahead.
Hi, good morning, sir. Thank you for taking my question. Sir, couple of questions. One is on the solar side. What kind of margins can be expected in a typical solar EPC job? And what is the value add, or what is the right to win for us in this category?
So as we have experienced, so definitely these are all current projects, but that too we could manage very effectively with our good, strong, execution capacity. So looking beyond this, we are looking into solar where the round the clock or the solar BESS, this hybrid as well as solar wind hybrid can be. We are looking into such opportunities where we are bidding those projects. And looking further with this transmission also, we are looking that way to see any good opportunity coming from transmission distribution. So making it the whole infrastructure or ecosystem of new energy.
Sir, I wanted to understand more on what is the right to win here, what is the execution which we do, what is the proportion of, bought out components, how does cost escalation pass-throughs work, or are these more like a fixed price contracts? And in a typical scenario, going forward, other than the solar projects which we are executing, what kind of EPC margins are doable? Is it around 10-11% or 12-13%? What type of margins can we do here?
So what we have understood as far as all battery-free projects, it's around 12 to 12.5%. So that is at EPC level. And the bought out items in that also, it is around, say, 65 to 70%, even more in battery. But then again, if you're talking of solar, it's around 70% of the bought out items, and rest is all land and other areas, which is civil works. So keeping a margin of about 12% is the range which we would be looking for future bids. And there is a fixed price contract. There is no price escalation which is to be paid until there is a change in law parameter which is affecting your project.
Understood. So, sir, in that case, given our reliance on...
I would request you to come back in the queue. The next question is from the line of Uttam Kumar from Axis Securities. Please go ahead.
Yes, sir. Very good morning, and thanks for the opportunity. Sir, I missed the number on equity investment in solar as well as battery storage currently. How much we have done and how much we will do in FY26-27?
So in 26, it's around 750 crore, out of which around 360 is to HAM and 391 is the solar and battery. And subsequently in 27 it is around 797 odd crore rupees in HAM and 460 in battery. So because solar will be all done.
Okay, so all in all, in totality, how much we will invest in next 2 years in HAM and solar and battery storage?
So as of now, all which project we have taken is 1,360 crore rupees yet to be infused.
Okay. And sir, this quarter our finance cost has increased quite substantially. So can we expect it to normalize going forward?
Yeah, definitely. As I already had expressed where it has gone high and why it is going to narrow down very fast.
Okay. And sir, what would be our capex guidance in FY26-27?
Capex is not much of the capex is required because we do have every capex ready where these projects which we are talking that there are 8 projects, mega projects where all completion being done within this year till Q2. So any say project equivalent to 6,000 to 8,000 crores where we want to mobilize of railway or even highway is adequate capex is available. So hardly it can be just 20-25 crore rupees for any key critical equipment if required.
Okay, sir. That's all from my side. I wish you all the best.
Thank you.
The next question is from the line of Deepak from Swan Investments. Please go ahead.
Yeah. Hi. Good morning, sir, and congratulations for a good set of numbers. So firstly, wanted to check it out in this year, in the revenues of 6,050, what will be the broader breakup in terms of the solar, railway and road project?
So in this you see that the Ganga Expressway was the major contributor at around 1,644 crore rupees and HAM 1,586 crore rupees. Solar contributed 1,430 crore rupees. So these are the major ones with railway 445, another EPC 965.
Okay. And sir, this year also the investment in the subsidiaries has increased from 628 to 1368 crores. Overall investment on the balance sheet side. So this is primarily into the solar project which we have invested, or how should we look into it?
As we were discussing from last Q2 to now, so this is because the typical nature of the project where the commissioning is a period of 6 months maximum. So within that duration, we need to pump in funds from everywhere, wherever possible. So that is because of that reason only.
Okay. And sir, finally, I just wanted to check it out in terms of the pipeline opportunity on the solar and water and river linking side. If you can throw some light, how should we look into these opportunities going ahead?
The central government is now checking upon the opportunities into river linkages, which is K-Betwa as well as the eastern Rajasthan canal. There was 80,000 odd crores as well as in Bhadra in Rajasthan and Vidarbha. So there are many more projects where the central government is interested and they look like they will be approving and going ahead with this opportunity. So these projects unlike not JJM, they are different kind of projects. Also in water projects in Rajasthan also we have seen in one of the HAM projects where bids are invited with the 10 years of O&M HAM projects. So those are the projects which we look forward where we do have some qualification restrictions, but we are looking at the joint venture partner to look further. As well as in solar, we are only looking into those bids where the margins are intact around this one. We don't want to go very aggressive into any solar or transmission.
Okay. And so just finally on the interest cost for the
I would request you to please come back in the queue for further questions. The next question is from the line of Sarvesh Gupta from Maximum Capital. Please go ahead.
Good morning, sir. Sir, first question is on the order inflows. So I think even in the Q3 con call, are you able to hear me?
Yeah.
Yeah, sir.
even in the quarter three con call, which was in February, we had guided for 11 to 12,000 crore of order inflow for FY25. Now, so we are short by almost 20%. So now this year again we are guiding for 11,000 crore. So what has changed in the ground which gives you the confidence that this time we will be able to meet the order inflow guidance?
So as in last year also, there has been a major dip in the highway only because there are a few kilometers being awarded at ministry level or NHAI. So this is now gone for the year because we were discussing about, because of the pre-qualification and certain land DPR and sanction were not in place. So it looks that this year definitely the budget is in place and we are looking into the same opportunity, around say 7 to 8,000 crores of project from highway to contribute into 11,000.
And secondly, on the HAM monetization, so the first 4 projects, full money is already accounted for in the fourth quarter result. Is that right?
Yeah, definitely it has been done.
And the 6 additional HAM projects, sir, which are supposed to be monetized, I'm guessing we are having around 750 crores invested in that. So that money should come back in this year with some accretion.
The total equity into these 6 projects is equivalent to 900 crore plus, and the debt probably is around, as of now, it is around 2,100 crores into these 6. So we are looking into this monetization as we are completing PCC of 4 projects already we have received. So with that, within 6 months, we can do that entire transaction by the year, and possibly we would be looking that this entire money can be taken back.
And sir, we mentioned that we want to be like a future-ready multi-sector construction company. Now, one doubt on that strategy that I have is that if I look at all these multi-sector construction companies which are listed currently, none of them, are able to even reach 10% sort of a margin. So what gives us the confidence? And we have been a company, sir, where 16% margins were the norm. So if we go down that path, will we be able to protect the kind of margins that we had, or we will also slide down to barely double-digit sort of a EBITDA margin company?
For sure, I think what you are talking, we have seen all maximum companies with multi-sector. Multi-sector is not that. Prime focus would definitely be this highways only. We are seeing that there is a big amount of work which is to be done in the highway. It's not that case the highway is all done. So it's only last 2 years which we have seen because of the last 3-4 years because of the price, this cost competition and aggression, as well as this slowdown because of this project awarding. But then again, there are strong pipeline in this particular. So roads always will be our prime product. Apart from that, yes, definitely, if we are not looking into this just railway, just metro as urban infra, we already had done Delhi UER project where the urban infra is involved. Metro we have done, Gurgaon Sola we have done. So they are the viaducts which we are doing. Jamshedpur we are doing. This is a 9-kilometer viaduct. So with this, it gives us the opportunity into urban infra also. But without compromising the margin, we are not confident that 100% it is possible to make 16. But within a range of 15 to 16% over a period of 2-3 years, it is quite possible.
Okay, sir. Thank you and all the best.
Thank you. The next question is from the line of Girija Ray from Yes Securities. Please go ahead.
Hi, good morning, sir. Thanks for taking my questions. Just to sense some kind of historical number, I'll not take much time. So just can you help me out with the number that 4 HAM projects we have monetized? What was the total equity investment we have done for those 4 HAM projects? And secondly, what is the value of the total?
Just one by one, I think it was 373 crore rupees, which we added as the equity, includes equity in 4 HAM, out of which 503 crore rupees already realized, and there's around 20 odd crore rupees which is likely to come within this year.
Okay.
So around 1.5 times.
that price to book is 1.55, right?
Correct.
Yeah. And one more question, that is Rewari Bypass Package 4. So I think we have got a good valuation on the project. The price to book value is quite higher as compared to other three of our HAM projects. Am I correct?
Yeah.
So what makes that valuation little higher, and we got a good valuation in that, if we compare?
It all depends upon the project complexity. So wherein it is the price indexing being done because of the WPI and CPI index. So it's the one thing, as well as the cost of O&M, which we value or the other partner value who is taking over the project. So these are, as we are discussing in these 5 projects also, they are the dynamic parameters, which one project can yield very good, even 2 times, and one project can only yield 1.1 to 1.2. So averaging it,
Okay.
This is the number which we are looking at.
Okay. And sorry to take it further, this will be my last question. So around 30 to 40 crore of differential amount, I can see if I do a calculation based on 1.55 times the book price to book value. So, sorry?
This is 30 crore rupees. This is around 30 crore rupees, which is balance.
Okay. Thank you very much, sir. Thank you very much.
Thank you. The next question is a follow-up question. It's from the line of Janam Jain from ICICI Securities. Please go ahead.
Thank you for the opportunity again. Sir, are we L1 in any of the projects which we haven't included in the current order book?
Sorry?
Are we L1 in any of the projects which we haven't included in the current order book of 153 billion?
No. Only the project which we got in April 25, that is a battery project, is not added here. That's around 700 crore rupees. That is not added here.
Okay, sir. And sir, I didn't get the number of order pipeline which we have for FY26 and the amount of bids we have already submitted for.
Already around 16,000 odd crores of bid already done across various sectors, majorly highway and railway. And so we are expecting to be this bids and bid pipeline, no doubt. As far as NHA is concerned, it's 80,000 crore rupees, NHA in ministry mode. And in other, I think it's all rolling kind of a thing. You are not having 100% accurate data.
Okay, sir. That answers my question. Thank you so much.
Thank you. The next question is from the line of Tushar from Kamyaka Wealth Management. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. I just wanted to know, like, the guidance which you gave in start, you're targeting for 7,000 crore for FY27, right? If I'm not mistaken, with the margin of 15-16%, and then keep that growth momentum going forward. Is my understanding correct? Despite Sir Chandrapur Nagpur project not fructifying.
Yeah, definitely. As we are confident on the numbers, so these figures are quite confident. We are quite confident that we will be doing more than 7,000 for the year 26.
Fair enough, sir. And sir, in the transmission and distribution and water management, what sort of margins are you seeing in that, and why it has not contributed to our order book as of now?
No, because we have just explained about it, is because of the solar projects where the capex being done. So there's a 1,300 crores plus capex done in these projects, where the top line and bottom line being eliminated from the standalone number. So thus the console number is giving a different picture. Just around 200 odd crore rupees of PAT is negative, if you see that number. So ultimately, whenever we start producing the generation, so in this year we already have started. Generation is already started. So within that, it is going to be corrected in the coming quarters. So with the console number will be corrected.
Okay, sir. This is a bit different question. So do you see any opportunity in airport runway EPC going forward?
Yeah, EPC, definitely there are many airports where the EPC bids are invited, like Varanasi, Kota, already in the pipeline.
Do you see that fructifying in terms of your order book going forward?
Sorry?
Do you see airport runway EPC, in terms of your order book, do you see that addition going forward?
We are qualified and we are participating in these bids.
Fair enough, sir. That was helpful. Thank you.
The next question is from the line of Ishan Bhatt from Ishan Investments. Please go ahead.
Hi, sir. Congratulations on the result. I would like to inquire about how the company is concentrating on the southern region, particularly the development of Amravati, capital of Andhra Pradesh. How closely you are monitoring progress of tendering projects, either individually or joint ventures?
So we have not yet initiated anything in Amravati development as of now, because it's not that we are not interested, but definitely as the time comes, we may look into any bid.
Okay, that's it from us.
Thank you. The next question is from the line of Madhvendra, an individual investor. Please go ahead.
Yeah, hey sir. I have a few questions. First is that we have entered the water segment around 1-2 years ago, but we haven't seen any major order wins or if means any order wins from this segment. And other thing is one of your competitors stated that road project ordering has slowed down due to change, means the government is looking to change the bidding norms due to increased participation from low-cost contractors. And it's been concerned because of past issues of execution delays. And the third question is this intercompany adjustment has been a volatility on the financials, and frankly it's somehow impacting the share price. So how do you see this panning out?
So the last question can be very well questioned. It's only a time gap that definitely the margins which we are reporting at the standalone level, they are the right margins. And any elimination which is being done now in the company between SPV and EPC is going to be being corrected in subsequent years. So the margins are definitely would be coming back into console only. The second thing is to improve water sector as we have done and we have tried, because in the recent past we have seen in JGM there have been lot of budget issues, the payment being stuck. So we dropped the proposal at that point of a time, though very ready with the bids. But now this water interlinking, river interlinking projects, and where what is the water resource department? There is no water, not a drinking projects. So there we look like it is a big infrastructure capex to be done. So these are the one. I think the third is what we were looking at, the pre-qualification, where the crowded space of roads, they have taken this water project. It's not that the pre-qualification is very simple, that anyone who has done this water sector projects will only be qualified, and the JV is allowed. We are looking into the JV partnership.
Okay. So means can we see this intercompany adjustment means not impacting the financials much from this financial year?
Definitely not, because it's a quarter on quarter. If you compare any number, with the last quarter the solar contribution was not there, so we have seen a big number impacting quarter 4 and entire year as well. So this is not going to be there.
Okay. Thank you so much, sir.
Thank you. Ladies and gentlemen, this was the last question for today's conference call. I now hand the conference over to the management for closing comments.
So thank you for joining us today. We have a strong year marked by a solid financial performance, a growing order book, and a committed team. We remain confident in our continued success and here to address any further questions. Please feel free to reach out to us or our IR advisor, Go India Advisors. Thank you. Have a good day.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.